Hey everyone, this is Ryan Mallory for July 21st, 2010. Going to do a daily market wrap up with you guys. It's been a few days since I last did one, so I think I owe it to you guys at this point. But in any case, though, let's go right ahead and look at the S&P 500 for today. As you can see, we had a pretty nice sell off to the tune of about 1.25% after yesterday's rally off the lows, which I lost about 2.6% of my portfolio. Today I gained about 2.1%, so I was able to take back much of those losses from the day before. We sell off further tomorrow. I think I'll be doing pretty good in my portfolio. My bearish argument is definitely still intact to this point. Let's look at the chart a little bit closer here. Uh, S&P 500 has been marked since middle of May by a series of higher lows and lower lows. But if you look right here, 1, 2, and 3, this latest attempt to break through this resistance level has failed miserably today. We got almost right up to it, and then when Ben Bernanke started speaking before the Senate Financial whatever committee, the market just sold right off thereafter, and uh, doing a good job. We got a little bearish piercing pattern here in terms of candles that shows a very bearish uh, outlook on the market going forward tomorrow and Friday as well. Key support area for this market right now is it continues to be the 1040 level that forms the neckline of the head and shoulders pattern here, that, as you can see, marked by this left shoulder, head, and then deformed right shoulder. We break below that, then our next level is going to be right here between the the 1110 and 1100 area. So we break through that, and then you know all chaos could definitely break loose. Test maybe the 990, 975 level. But in any case, let's get through this 1040 level right here, and then we can see where the market wants to take us thereafter. But I still am about 95% short on this market. Had one position reach its target today, got out of that. That was CERN, Cerner Corporation. It sold off about almost 6%, I believe it was, before reaching my target of 72.39. Got out of that, took my profits, and helps alleviate some of the short exposure that I have right now in this market. So yesterday's peak, I think I was about 120% short. I got stopped out of a stock called Schnitzer. I figured any stock that's called Schnitzer would probably be a winner to for, for the short trade, but obviously I was wrong. Got an upgrade from UBS here yesterday, and then it just took off to a tune of about 11%. I got stopped out at about 5% or so into it. I think the exact price was 42.37. As you can see, the day it finished up like uh, at 47. Actually, I got stopped out about $44, and then the stock went as high as $47. Opened today as high as $48 before selling off almost 3%. But in any case, that's just a really good example of why you do use stop losses, because I avoided a lot of pain and agony there by cutting the losses short there. And let's look at the next chart here. We've got the Nasdaq, similar head and shoulders pattern here that we've been talking about for some time. Uh, Once again, it's going to have to test this neckline here before we can get too excited about the downside of this market. Russell, same concept. Got the nice downward trend line intact. Today it tried to test it, failed. Let's look at Goldman Sachs. I talked about this one quite a while ago, about this little wedge pattern that was forming here, that a breakthrough on either side would uh, initiate a good entry. If it broke above this line, this channel here, then you could initiate a long position. If it broke below this line here, you could initiate a short position. Well, broke broke above it as soon as the Fed settled, or the SEC settled with Goldman Sachs. It broke up to the upside, but I'm not gonna go long on this stock at all. I mean, I'm a little troubled by some of this price action here, because it is just all over the place here. Reports earnings, goes way down. yesterday obviously it rallies off its lows way up. Today got another, piercing pattern in terms of bearish candles. Uh, so honestly, I don't see much of an entry there. Let's look at some of the stocks in my portfolio here. ESV came extremely close to getting knocked out of this position here today, within 10 cents actually. But as I've been saying, I've been telling you, I've been following this cup and handle pattern here, or you can call it inverse head and shoulders pattern too, depending on how you look at it. But pretty much finished right at resistance there today, so just a tad below it. So I'm not getting out of that position unless I do get stopped out at my original stop price. But I do remain in it by a thread. WTFC, great stock, one that I'm almost pretty darn close to hitting my target price in. I think probably about another 20 or 30 cents. I'll be out of this stock with a nice hefty gain. And as you can see, see pretty clearly why I did trade it. I got in right around this upper channel line, shorted it, and hoping to cover right here towards the bottom of the channel. CERN, another stock here that performed quite nicely for me. I got out of it today after reaching my target price at 72.39, I believe it was, so right about here. And it didn't stay at those lows. It rallied back a little bit towards the end of the day, but nonetheless, that's a non-issue for me now since I'm not in the stock. SLAB, nice bearish engulfing pattern here on the candles, encompassing the entire range from yesterday. Definitely a nice bearish setup going forward here. So quite excited to see what this stock will do tomorrow. ALB, another stock that I am short in. I've got basically a small profit in this stock right now as it stands, trading within a nice range here. If we can see it move to the downside here, I could be booking some profits here pretty soon. I believe my profit target is around $38 and change. WRC, nice channel similar to the S&P and Russell that I've been trading in. Bounced off of this trend line here. Should go down from here if tomorrow the market cooperates and wants to continue its selling spree from today. OIV is a stock that I was able to get out of I think it was about 3 days ago. In any case, I could be tempted to get back in it again if we were to rally to around the $11 area. I don't see that happening since that's about a good 20% away from where the price is currently at. So this stock is pretty much dead to me at this point. I'm out of it, so I really don't have a dog in the fight and doubt that I'll have an opportunity to reshort this thing again. HIBB, another retail stock. Not holding a lot of profits in this one either, but my thesis on this stock as well is to try to cover around this area of the stock itself. NSIT is my latest short. Similar theory to the HIBB stock. However, this one isn't cooperating with me as nicely as it decided to break out of that channel and try to move up. Today was a little bit more reassuring since it was a pretty good bearish piercing pattern here. So we'll see if that provides further downside tomorrow. The ever so popular T2108, as you can see, we made a lower high in this particular indicator. We're still in the mid-range stuck, so it's not leaning towards the bulls or the bears at this point. And that's about it. I don't see myself probably initiating any new short positions tomorrow. I could, but unless the market just presents me a golden opportunity, I'm going to probably ride it out with the shorts that I have in my portfolio right now. That doesn't mean that I'm not going to be posting new trading ideas to both the long side and to the short side, but as far as my activity in the market is concerned, I'm going to let my targets and my stops just play themselves out. So that's it for now. I'll see you guys tomorrow.